Hey, John, the Alliance of Comprehensive Planners has just come out with new information to help us as planners evaluate long-term care insurance with clients and help them figure out if it makes sense for them. At the same time, Genworth, one of the major long-term care insurance providers, has sent out to their current clients letters, to many current clients, letters that say, hey, you're gonna have to pay more or we'll change the policy. How to even sort through long-term care insurance. That's what we're going to talk today about on Friends Talk Financial Planning. Hi, I'm Bridget Sullivan-Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. And before we dig into the long-term care insurance issue, I want to remind everybody to hit that subscribe button. It helps other people find this content on YouTube. And with that, I'm excited to have this conversation, which is maybe a weird thing to say about long-term care insurance and how to think about that stuff, right? But just as I'm listening to you describe things in the intro, Bridget, I mean, it's confusing, right? You've got to, first of all, you got to figure out how this stuff even fits into your financial situation. And if you've made a decision, kind of coincidentally, right? The Alliance of Comprehensive Planners just, I think, 2 years worth of work to come up with some really cool tools to help us figure out or help think about the conversation about, how do you think about long-term care from an insurance standpoint in particular, and as well as other ways of thinking about it. But then at the same time, we're hearing of people, as you mentioned, from Genworth, right, saying, hey, rates are going up, so you can take lower benefits or pay more. And like, how do you think about this? So really timely. I'm looking forward to digging into things.
Yeah, so first let's talk about the idea of self-insurance, which does not come up with when you're buying house insurance or car insurance, right? So, those are, you have to have insurance generally, often because your mortgage provider requires it or your state requires it in case of auto insurance. But with long-term care insurance, it's optional. And it's also the likelihood that you need it is actually a lot higher than making a major claim, say, on your house insurance, or the chance of you dying when your kids are young, so with life insurance, when we recommend term life insurance. So the chances of you needing long-term care we just are looking at it's about 35%. But the chance of actually paying the policy and then having the policy pay off is lower than that. I would say, it's lower than that. So for instance, if you have to pay $10,000 a month for long-term care insurance and you pay it from when you're 60 to 80 and then you file a claim, well, you've already paid in $200,000. Right. And so you have a ways before that policy is going to pay off. All right.
Right.
So that's why. So if you had just saved $200,000, that might have that might do the trick on many in many situations. The other thing that is really important to point out to people is they don't sell policies anymore that are just unlimited, go on forever. So they don't sell a policy to somebody that's 60 and, well, if something happens to you tomorrow and you need to be in a nursing home for 25 years, we'll pay for the whole thing. They used to do that kind of thing. And that's why Genworth is sending out these letters.
Right.
Because it's costing them more to insure people than they were expecting.
Right.
So I just want to make sure that people understand that, because I think that a lot of times people are thinking, okay, I have a fear of not being able to pay for long-term care, and I want to buy this insurance policy. And they think that totally does everything for them. And it really doesn't. It can help a certain amount, but the policies generally have lifetime benefit maximums. And the policies that sell these days generally have lifetime benefit maximums, lifetime benefit maximums. I can't say that.
Yeah, that's three times fast.
And other restrictions. But that doesn't mean that you never want one.
Right.
What are your thoughts?
I want to just pull out a couple of things that you said in there, and I'll start with that last one. Is that oftentimes we think of the insurance portion of this as like the solution, right? And I
Right.
think that comes sometimes from how it's being sold to folks. And, you say, here's this big, scary number of how much it costs, $10,000 a month or whatever the number is in your area to be in a nursing home, to need long-term care, need assisted living, those sorts of things. And the idea of, boy, I want to cover all of this. And I love that how you describe it. It's a piece of the puzzle, right? It can bridge some gaps, but it's not the solution. And I think if you think about that in that fashion, it can be really helpful. And then the other thing, and I love the comparison of, homeowners versus car insurance versus long-term care, that when you think about what's insurance designed for, it's not designed for the things that are going to happen. It's for those really high cost and unexpected things, right? And not likely to happen things. And we talked a little bit before we hit record. I know I've used my homeowner's insurance. I know you have, but it's not because my house burned down and it was a total catastrophic loss, right? It's for some of the other things. That idea of, hey, but I have the insurance, not necessarily to put a new roof on, but that if the house burns down, man, I can replace it, right? That sort of stuff. And when you get into the long-term care idea, hey, look at the statistics. Something like 1 in 3, 1 in 4 people are going to need some sort of help as we continue to get older and live longer. And so it's more of a type of thing. It's sort of like car insurance. I use the example all the time that, your car insurance doesn't do oil changes and buy new tires, right? Because that's part of, it's, geez, when I get in an accident and need to replace the whole thing, or I've got a liability, right? It's those big unexpected things, not the usual things. So I really appreciate that idea of things with the long-term care and how to think about it, right? You think, oh, golly, it's insurance. Well, it's not that easy to think about. And then just one other thing I wanted to bring up in there, and you brought up the old policies, right? That we maybe have talked about a little bit on the show. My dad has a long-term care policy. He's using it right now as he transitioned to memory care. And he's got one of those old school unlimited benefits, right? So as long as he's around, he gets those benefits. And just a quick point, and we're not going to get to specifics in this in our show here about, hey, what should you do with your long-term care policy? But when somebody has one of those old school policies that's got unlimited benefits, as you mentioned, you can't buy those things anymore, right? So before you make changes to reduce or get rid of the insurance, you really need to look closely, because it's not like you can make a different choice, tomorrow if you change your mind. Having those things can be a really, golden goose sort of a thing. So you want to really make sure, if you got one of those old time policies from 20 years ago, it could be a really good deal, again, depending on the circumstances.
Right. Absolutely. So the other thing is that, again, back to self-insurance, I want to mention that, like Burt Whitehead, who is an inspiration for both John and I, and started the Alliance of Comprehensive Planners, used to have some sort of rule of thumb. And this, I heard about this back 15 years ago. And he said, if you have more than $1.5 million in net worth, you can self-insure. Like I don't think John and I are confident enough to like make some sort of pronouncement like that. But I
Right.
do like the cutoff. Like there's some amount, like if you have more than that, you'll be able to have enough money. You'll be able to come up with the money to pay for these expenses if you end up needing them.
Right.
Okay.
Right.
Um,
One of the things that I remember him saying also is, you take a look, and one of the problems with the long-term care insurance is that it's quite expensive, right? You had
right.
mentioned 10,000. I think that's a reasonable number to use as far as annual premiums, depending again, but I mean, it is not cheap, right? And so
Right.
you say, hey, listen, here's this future thing, or I could save that money, or really, if I'm preserving my estate for my kids, I could give them that money today versus buying the insurance. Right. There's different
Right.
ways to look at that. And I remember him, I think it was him saying one time that, long-term care insurance is expensive, and the people that can afford it might not need it because they could choose to self-insure. And the people that really need it can't afford it. And then you got people in the middle that maybe they want it, but golly, it takes a big chunk out of their retirement income and savings and those sort of things. So it's this real conundrum with how do you
Right.
pay for it and think about the dollars in this.
Right. So here's some of the questions that ACP recommends that you ask, and I think John and I both love all these questions, actually.
Yeah.
So the first one is your family health history, neurodegenerative disease, and cognitive decline. So it's how are you with that? Next, anticipated longevity. Now, people generally underestimate how long they're going to live. So if you have a feeling that you're going to live to X, you might say X plus 5.
Right. Right. Let me
Family,
just grab those two if I can, Bridget. If you think about it and what we're trying to combat, it's not a yes or no. It's sort of on a spectrum from,
like,
scale of 1 to 5, right? You go, and just from those two things, what's my family history been? Geez, and not that, necessarily cognitive decline is hereditary, but there's, depending, hey,
some,
we've had a lot of people in the family that have had cognitive decline or Parkinson's or these sorts of
right,
things. And we've also had a lot of longevity in other parts of the family. They go, hey, in my genes somewhere, a history of some problems and a history of living a long time. You go, those two things put together might lead me to say, geez, ensuring that might make some sense. Whereas if I'm on the other side, like, geez, nobody's ever had Alzheimer's and everybody dies before they're 80. You go, that
right.
leads me to think in the other direction, right? That sort of concept as we look at these questions, right?
Right, absolutely. Next, family history with long-term care insurance. So some people get long-term care insurance and then they get into a big fight with the insurance company. And other people, they're have these great policies that pay off. They help their loved ones through their final days. And then you have the other people who paid for it and maybe regret it, but maybe don't. I think the people that regret it the most are the people who've paid for the policies and have to fight with the insurance companies.
Yep. Yep.
Yeah. So it's like, that's why we're saying, know what this policy says before you commit to it. And don't buy this like, oh, I'm buying a long-term care policy, I can relax now, everything's taken care of, because
That's
it's
right.
really, yeah. Next, risk aversion. I think that's actually an important one. I don't want to risk it.
Right. How
First,
willing are you to roll the dice versus, geez, I mean, some people like to insure as much as they can. Other people want to buy as little as they need, right?
like I have people who are always trying to get me to invest their money more aggressively. And then some people who are like, why am I even having anything in the stock market? And
Right.
I'll try to explain to them. So and as you age, this is one of those personal characteristics that can, what I call calcify. So it can get a little more extreme in you, whichever one you are, and it also can change. So that's an important one. Current level of financial independence. So how much money do you have? That's
Yep.
basic. Other income sources, Social Security, pension, inheritance. So you forget when you hear these $10,000 a month number, like, oh, well, I got Social Security and a pension running, showing up every month. So it's not going to be that big of a sweat. Is that
Right. Right. And the
yeah,
other the other corollary to that one, Bridget, I think is, here's this expense. Well, it's not like I'm spending zero and now I got to come up with 10 grand a month, right? I'm already living on some things. And if I need to go into where I need a nursing home type of thing, it's a change, but it's not 0 to 100 miles an hour sort of thing.
exactly. And like, so people underestimate how little other spending money they need when they're in a nursing home.
Right. Right.
Like yeah. So, that's an interesting thing. Okay. The desire to leave an estate. So, that's a factor for people. They want to leave an estate. They want to leave money to their kids. And you mentioned before, well, why don't you just give your money to your kids? Yeah,
It's an
and then
option,
if you
right?
need long-term care, you can, yeah. So there's other things, but I think that's another factor. Cost of care where you live or plan to live. Like, so the 10,000 that we're bantering around right now is something that I just heard on the internet about San Diego, right? So that's higher than if you live in Chicago or if you live in a rural area or whatever. So
Right.
yeah, so that's a factor. Willingness to use home equity, sell home to fund long-term care needs. Okay,
Right.
so that's important, right? And that kind of gets to the next point too, willingness / ability of spouse to provide care.
Right.
Like, so how is this going to work with spouse? So one of the uses for long-term care, I think, is if one's like to not deplete funds for the second spouse if something happens to the first spouse. I would say uh, that is a good use of long-term care. Does
Yep.
that make sense?
Yep. Absolutely.
And so those are the factors there. Willingness, ability of children, family to provide care. So is somebody else going to do this for you? And so
Yep.
then you don't, like, as part of needing long-term care or assisted living, a lot of times it's just like, well, I could live somewhere else if somebody, just needing pretty much help. And so
Right.
if you have other people who provide it, that's great. And then financial support for dependents. So geez, if you were supporting dependents, then you would want more long-term care insurance, right?
Right.
Because you're not going to be able to get any money from independents, right? So those are the factors. And so again, what you want to look at is where are you at on the scale
Right.
that, no.
I love that idea. Maybe that's a good way to wrap up our discussion here, is just thinking about it's not one question, right? It's not, do you have enough money? Right. And it's not, what is your family history? It's a combination of a lot of things that go into making this decision. And I'll just say again that this, comes from the Alliance of Comprehensive Planners, where both Bridget and I are members. And if this resonates with you, I'll encourage people to check out, Bridget and I are taking on new clients and be happy to help, or to find an advisor in your area. You can check out acplanners.org. And with that, let's wrap things up, right, Bridget?
Yeah, so I'm Bridget Sullivan Mermel, and I've got a family planning practice in Chicago, Illinois.
Yeah, and I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. And before
And
we leave,
please
don't forget to hit that subscribe button.
subscribe.